Temple Asaju, who is our business correspondent, is live to us from our studios at the Nigerian Stock Exchange bright and early on Monday. Temple, good morning. Hope you had a very nice weekend. That story gives you a snapshot of the very woeful month of August for the African markets, generally speaking, broadly speaking. What's the key data for us last week? I'm sure we finished off in the red in a very massive way to finish the month of August under consideration. Take it from here.
Thank you, Bosin. Quite surprising numbers you read out, actually, but really, we shouldn't be surprised that Zimbabwe is improving. I mean, if you compare the Zimbabwean markets to the Venezuelan markets, that market, Zimbabwe, really has a bit of a brighter spot. Again, don't forget he had the election that was concluded recently in that climb. So this should at least give a bit of traction to the market. But then let's go back in time to last week, the 35th week of this year that just ended in the stock market here. Yes, all-share index was down 1.63% on account of sell pressure, profits taking, a bit of profit taking after we saw bargain hunting by way of entry into stocks with fundamentals. So last week we saw increase by about 60% in the volume of shares that was transacted on in the markets, equities specifically, by way of value, there was increased by 124.8%, and that's how we arrived at the 23 billion naira worth of transactions that we had in the market. In all, there was just 17,009 deals for that week. Where did we get the drivers from? Look at the sectors where the banking sector was deep by 1.49%, but the highest loss was in the industrial sector, where we saw profit taken in Dangote Cement down by 2.98%, and WAPCO, which is Lafarge, down by 10.5%. In this case, you saw profit taking, and of course the exit of offshore investors. For the banking sector, we all know the story of MTN, where 8.1 billion US dollar is meant to be returned to the country through two of the listed companies, talking about Stanbic IBTC and Diamond Bank. In terms of the weekly performance of Diamond Bank, we know that over 3.7 billion naira worth of shares were transacted. As a result of this Apex regulation, the fine that was laid on these, leveled on this company, ditto for Diamond Bank, where we saw a serious sell-off. So these whole performance impacted the banking sector, where we saw about 1.49% decline. FBN Holdings and Zenith Bank, as well as GT Bank, also contributed to the sell-off we saw there. Consumer goods sector was also down by 0.34% on account of what we saw in Dangote Sugar and a couple of other companies. Nigerian breweries, basically, which weakens that sector by 2.1%. For the insurance sector, was down fairly, 0.09%. It would have been worse than that if not for the level of buy sentiment that we saw on NEM Insurance, as well as a couple of other stocks that were able to prop up that, or to mitigate the losses that would have been seen in that sector. But we saw losses of 2.1% in Continental Reinsurance, Standard Alliance Insurance, which declared all of its backlogs of earnings. Yet that didn't move investors. Instead, it crashed it by 9.5%. Sovereign Insurance was down 4%, basically week on week. Oil and gas sector moved up by 0.97% after Total notched 6.8% week on week, and O&O 6.0% in terms of movements. Let's do a bit of the energy market. After we saw this gain in Total on O&O, on Friday we had decline. Corn oil didn't change, Forte oil didn't change. After we saw 1.44 million units of shares exchanged in that side of the market, on the counter of Forte oil, the price came down to 20 naira. We're yet to fathom what is going on in Forte oil. But with the look of things, analysts have reported that that stock has upside of 36 naira gain. So if you want to make entry, this is perhaps the right time for you to start making entry. Let's look at MRS. Was unchanged for a while now. We haven't seen movement in this stock, but O&O was up 0.95%, Seplat unchanged, Total down 1.20% on Friday, but week on week it actually notched up some gains there. Eternal PLC is another stock on the energy radar for us that was up by 8.06% after we saw 2.5 million units of shares transacted on the counter there. Japol was down on Friday 7.41%, down to 25 kobo per share. Unlisted securities market was negative by 0.23%. That's 23 basis points. USI came in at 693.14 after the market's capitalization moved up by the same margin to 469 billion naira. In terms of volume, with attraction there, 426% movement to 31.45 million units of shares traded. This is greater than the 5.3 million units of shares that was traded in the preceding week. Look at the volume; it was up by to 350 million naira after investors exchanged all of these in 71 deals. CSCS was up to 13 naira, rising 2.11%, and was the most traded in terms of volume and value. Volume, we had 15.83 millions of shares of CSCS, which represents the depository of the Nigerian capital markets on the counter there. And let's move on to the fixed income market, the debt market, where we saw bearish trading in the bonds market. It was bearish trading owing to higher stop rates at the Nigerian Treasury bills market on Thursday. These brought about weakness in demand from the foreign investors, stemming from the general risk of sentiments that we've seen in the emerging markets, despite the high cost of borrowing right now. That has not been able to help the offshore investors to prop up their demands. Instead, we saw average real yields rising 25 basis points week on week to 14.81%, and the yields expanded across all curves following the sell-offs that we saw in the February 2020s. Looking at what we had on Friday, represented on the numbers from the FMDQ, which is the secondary side of market. You look at the 23rd of February 2028 was down. We also had the April 2037 down. So yields expanded across all curves following the sell-offs in these particular securities. For the Treasury bills market, you had Treasury bills opening bullish, but at the end of the day, at the end of the week, they turned bearish, and this follows the high rates of the high stop rates that was recorded as a result of the result from the PMA auction on Thursday. So this gave us high stop rates, 5%, 5 basis points of yield expansion on average to 12.2%. Generally this week, we see the yields expected to fall on buoyant liquidity that we have in the system right now.